Hi guys, welcome to this Money Control live stream. It's a Friday morning. The cues are looking fairly mixed because globally we don't have all that great cues coming in. Wall Street ended mixed, but the GIFT Nifty is hinting at a mild but positive start. Of course, it has been fairly volatile on the street as we've been recovering from the election day crash. But 23,000 will remain a key psychological level to watch out for, and we'll have to see whether or not the bulls make a go or make a dash at that level today itself or not. But for the week, we are in the positive territory. Lots lined up over the next 30 minutes. We'll be talking about a whole host of stocks. We'll be getting all your stock related queries answered by our experts. And of course, we will also be focusing in on the RBI policy outcome, that will be announced by the governor at 10 a.m. In the run up to that, we will be asking our experts what to expect from the RBI this time around. Of course, before we move any further, let's take a look at the top stories at this hour before we get our guests on board. Wall Street ends mixed ahead of non-farm payroll data expected later today. The pan-European stock 600 closes at a record high after the ECB cuts rates for the first time since 2019. Asian markets are mixed while the GIFT Nifty is suggesting a flat but positive start for the Indian market. Crude prices gain for the second straight day. Brent reclaims the $80 mark as the ECB cuts rates and hopes rise of the Fed following suit. Gold prices hit a two-week high and silver gains about 0.5%. The RBI's Monetary Policy Committee will announce its rate decision later today. The central bank is seen holding rates at 6.5%, which stands unchanged at withdrawal of accommodation. And the new NDA government is likely to be sworn in on the 9th of June, and sources say that allies JDU and TDP want a common minimum program and about 4 cabinet berths each. BJP is likely to retain the speaker's post. All right, 11 minutes to go for the markets to open. All eyes will be on whether or not the bulls managed to make a dash at that 23,000 mark. But yesterday, the sensex rose somewhere around 690 points to shut shop above the psychological level of 75,000, and the Nifty as well rallied somewhere around 200 points to 22,800. Mind you, this was the recovery. The second day of recovery was marked by wild swings. We saw extreme volatility where the Nifty was in fact at one point above that 22,900 mark as well. But there was a fair bit of oscillation, and then we still managed to end above that 22,800 mark. The India VIX though was down somewhere around 11%. At 16.8 levels or thereabouts. If you look at the Nifty put call ratio, that came up to 0.81 vis-a-vis 0.75 in the previous session. And talking about the stocks in F&O ban, there are no new stocks, but Z Entertainment continues to be in the F&O ban. A fair bit of FII selling continues. FII's net sold shares worth 6,800 crore rupees in the cash markets, but that was supported by DII buying. The domestic institutional investors bought shares worth 3,700 crores in the cash market. Of course, let me bring on board our technical expert on that note. Joining me is Raja Venkatraman, who's the founder or co-founder of NeoTrader. Great to have you on the show, Raja. Dramatic turnaround, right, after the kind of crash that we saw on Tuesday. And do you think, given the fact that we have managed to reclaim that 22,900, albeit briefly, do you think 23,000 is expected to be reclaimed sometime around today itself?
Yeah, good morning, Nandita. So the kind of euphoria and the scare which we saw in the earlier part of this week definitely has given a conclusion that the market is going to continue in this fashion, and the dips are being bought into, and the kind of on Tuesday everyone felt that they should have exited, and on Wednesday everyone felt that they should have actually bought those dips. So these are the kind of emotions that we are going to run into. But then when we take a look at the market in the last almost 4 months since the start of the year, around 21,800 is an important level that has been held. It has been tested every month. So what it says is that if Nifty were to give away, or if we have to give up the bullish euphemism and bullish enthusiasm, we need to ensure that 21,800 is broken decisively. Till then, every dip is going to be a buying opportunity. And yes, 23,000 levels, there are potential for this particular level to be reclaimed today itself. We have the RBI policy, and yes, ECB has already given a hint. And if our RBI also falls in line, then it could ensure that the Bank Nifty takes the Nifty higher. And yes, we have seen that Bank Nifty has been more stronger than Nifty, though it has not shown its true colors yet. But I believe that Bank Nifty can definitely play a part in today's market action and in the forthcoming week as well. So now looking at what levels are we looking at, I feel that the highs which were formed on the exit poll high is going to be a challenge. So this month is more or less could be a sell on rise and buy on dips. So this should be an approach. Market is going to be a buy opportunity here. So sell on rise means keep booking profits at higher levels and use dips to buy into. Breakout buys have to be approached, but then one needs to have a monetary target. Technical targets are available, but then the kind of scenario which is available at the moment, the kind of especially at the national level, the government formation, the kind of policies that will follow. So these are the kind of uncertainty which is going to be there. And till the budget really comes through, which is somewhere in the mid of July, that is what is a reasonable expectation. Now, till then, one should not be gung-ho about the bullishness, but then one should definitely stay on the bullish side, because I truly believe that the markets are bullish. I have been echoing this sentiment right from the last 6 months, and I continue to maintain that. Levels are 47,500 on the downside for Bank Nifty, for bullishness to be violated or to be shelved, and 21,800 on the Nifty. Till then, every dip is a buying opportunity. And the highs which were found on the exit poll will take some time, at least for the next 2 to 3 weeks to be exceeded. So this is my take on the overall analysis.
Right. So how are some of the PSU banks looking like on the charts, especially the likes of SBI, which saw a massive 15% crash on Tuesday, but has regained some ground, but it's still some, 6 to 8% off highs. So on SBI, what are the levels to watch out for next? Do you think the up move will continue? And secondly, we have a query coming in on a Karnataka bank from Satya CK. Thought might as well get that address since we are discussing banks. He wants to know the medium to long term outlook on a Karnataka bank as well.
Okay. So first up, SBI has definitely, it hit the lower level circuit, which was surprising, and then it dipped further lower. But then what has happened is that in the process of what it did on the election day, it has completely, removed all the exuberance which was there. But then the good part is that it has come into some good set of supports. And I believe that this is the right time to buy SBI. So those who were asking earlier on our channel, on our stream about SBI, they should actually be buying SBI now, because it has come out with good results, and I continue to believe that this bank is going to perform. So those who are looking at 3 to 6 months play can look at a target towards 1,200 within the next 6 months, because the movement is definitely there. It has come down into a good set of supports, which was not happening in the last 4 months. So SBI is definitely one very interesting pick, which I would say. And the next is Karnataka Bank. Yes, it has had its fair share of run, but it has not been able to really show some momentum here. And I would wait for some kind of movement to emerge, because this particular banking stock has not shown some kind of movement which one was expecting. So if you are going to look at this particular stock and see that yes, this is a dip to buy into, I would rather say stay away. Look at an SBI, it's definitely going to move. And if RBI is going to help its cause, then I'm sure that SBI will definitely be the front runner.
All right. And what about private banks? ICICI Bank will be in focus given the fact that SEBI has issued a warning to the bank for the investor outreach with respect to delisting of ICICI securities. Among the private banks, ICICI Bank and HDFC Bank has also been in focus because there have been brokerage notes saying that in the August review, MSCI review, it may see an increase in weightage. How are private banks looking like now? Do you think opportune time to get into some of these names?
Private banks somehow does not attract me so much because the kind of brokerage houses definitely prefer more coverage on the private banks. And then when we talk about the private banks, I truly believe that ICICI Bank is better. Regulations from authorities are a norm and they keep coming. But then what you got to see is which bank is able to perform and hold well. And in that, I would definitely say ICICI Bank is my first choice and Axis Bank is my second choice for a private bank. If you want to really go into the private bank scenario, then I would definitely go with ICICI or Axis. I would not still go with an HDFC at the moment. Yes, brokerage houses are definitely calling for a buy opportunity, but it's not my take as of now.
Also want to get in your thoughts on a Bajaj Finance. The board has approved IPO of its housing finance arm, right? Bajaj Finance has done okay this week. Would you advise a look at this particular stock? How is the risk reward stacked up here?
Yeah, currently, yes, Bajaj Finance is trying to wake up from after its sharp decline over the last few months. And especially this entire year, it has only spent time in consolidation. So yes, it is trying to put in a bottom here. So levels around 6,500 could be an important bottom to consider. But then I would still really wait for it to cross 7,000 decisively by the close of a trading session. Any trading session, if it closes above 7,000 levels, then that would be a good day, which I would consider that Bajaj Finance has finally given some traction. Because currently, the markets, there are a lot of opportunities which you can buy at lower levels. But then the thing is that you need to see whether it is showing some strength at lower levels or not. So Bajaj Finance is still not showing that strength, so I will still wait.
All right, wait it out for Bajaj Finance, that's the call. But particularly for today, what are the stocks that you will be keeping on your radar, Raja?
Yeah. So you have already named one of them, and that is SBI. I would like to buy SBI at current levels with a stop loss around 815 for a target towards 833 and 840. Because SBI, like I said, if the policy is favorable and we get more positive cues, then I'm very sure that SBI could really have a good strong movement to the upside. And the second would be Glenmark. Pharma space is once again looking up, and Glenmark has been performing quite well. It showed some good movement towards the close of the day, and I believe that the trend can continue today as well. And one should look to buy at current levels above 1225 with a stop loss at 1205 for a target towards 1245 and 1260.
All right, Glenmark, SBI, those are some of the stocks being recommended by Raja. Hold that thought, Raja. Markets have opened up and we have opened up marginally in the green. Actually, we've dipped into the red now. The Nifty just about holding above that 22,800 mark. The sensex is also in the red, but no big cut to speak about, although it is hovering around that 75,000 mark. Mid-cap index is holding out mildly in the green, 0.2%, kind of an uptick there. The Nifty Bank index is in the red, lower by about 140 to 150 points. Let's take a look at the small cap index as well and see how it's doing. Yesterday the small cap index saw a good 3% rebound. So yeah, BSE small cap index also in the green. So broader markets are holding out, and in early trade the advanced decline ratio is firmly tilted in favor of gainers. 4:1, that's the NSE advanced decline ratio for you. Let's take a look at some of the other sectors then. The auto pack, let's see what the auto pack is doing. All of the sectors, in fact, managed to end in the green side of the FMCG and Pharma pack yesterday. Autos in the red, and let's take a look at the FMCG pack also. Yesterday it came under a fair bit of profit booking after 2 days of gains. Today it's slightly in the green. Perhaps it's, you can say that it may be outperforming the other sectors, because as far as till now I've seen autos and banks in both the sectors are in the red. Metals, that should come up for you on your screens next. Consumption is in the red, but metals is what I want to see what that's doing, 0.5% lower. And the realty pack was the top gainer yesterday. It was up 5%. Let's see what it's doing. Yeah, extending gains, 0.5% uptick there. Aside of that, what is the Nifty PSU Bank Index doing? I want to see that, because yesterday it staged a good rebound of 3% or thereabouts, mildly lower. But yeah, so all in all, it's looking pretty much mixed. Headline indices are down. Even the mid-cap index has given up the mild gains that it was witnessing. But sectorally, it's a mixed bag. Realty extending gains, FMCG mildly in the green, but bank index is in the red. And let's take a look at some of the movers then on the index. Wipro on the back of a deal win in the US, 3.5% up. Tech Mahindra, Infosys, HCL Tech. So top 4 gainers on the Nifty are from the Nifty IT pack. IT also saw good traction yesterday, wherein you had 2 top gainers on the Nifty from the IT pack, and today as well, similar picture emerging, 4 top gainers from the IT pack. Adani Ports, that's the other gainer. Infi, HCL Tech, all of them in the green. Apollo Hospital, Bajaj Finance as well. We were just talking about the stock a few minutes ago. That stock is in the green. Apollo Hospitals, Divi's Lab. Hero Moto, by the way, was among the top Nifty losers yesterday, and today it has managed to stage a comeback. Cipla, HUL, these are some of the other gainers. On the flip side, you have IndusInd Bank. That's among the, that's in fact the top laggard on the Nifty. L&T, Power Grid, Eicher Motors, JSW Steel, you have ITC, Kotak Mahindra Bank. So some of the private banking names, in fact even SBI is in the red, and some of the PSU names are also in the red, including the likes of Power Grid, Coal India, and the likes. But HDFC Bank, IndusInd Bank, Kotak Mahindra Bank, SBI. So banking pack in a spot of bother ahead of the RBI's monetary policy outcome at 10 a.m. Looking at L&T, it's among the top laggards today. How would you view some of these engineering and capex names now, Raja? Because initially there were concerns that the pace of reforms may slow down, and the government's focus may turn to consumption from industrials and manufacturing or investment. Would you say that L&T still remains a buy, given the fact that now we will see a coalition government, right? So focus on infra and manufacturing is expected to continue, even if at a slower pace. So given that, would you say that engineering and infra names still feature on the buy list?
Yeah, see, if it's a coalition government or it's only BJP, ultimately these companies are required for a country to progress. So no government that will be formed, even if it for, let's assume that it will be Congress. No one would want a country to go behind after it has gone ahead. So they want to maintain that image. So the thought that these companies will not be at the forefront of one's thought is something which I do not consider. Yes, they may suffer because of the delayed policies or delayed projects coming to their table. But then I do believe that these companies will continue to be in progress, because BJP's agenda is not going to change. It's only going to strengthen, and the other parties as of now, they are claiming to support the vision of BJP. So NDA as a whole, yes, it is a coalition government, but then based on the historical evidences, there are possibilities of us doing better in the next 5 years. So let's see what the future rolls out. But then I do believe that these companies will definitely be in demand. And yes, one should look to buy these companies at lower levels. And I believe LT, ABB, Siemens, these are all some companies, Cummins. So these are all some companies which have done well before the election results. And I believe that these companies will continue to do well now also.
All right, these stocks will continue to do well going forward. Hold that thought. Raja will come back and discuss more stocks with you. But let me also bring on board our next guest for today. Joining me is Nirav Karkera, Head of Research at Fisdom. Great to have you on the show, Nirav. This week has been a topsy-turvy one, and topsy-turvy I think is an understatement. But we have managed to find our feet, right? We are near about the 23,000 mark. So what explains the dramatic turnaround in sentiment after the kind of crash we saw on counting day?
So, Nandita, it's almost evident, So a couple of things unfolded in the past week. There was the series began with a lot of hyped up expectations. That's when we saw, the indices create a lifetime high once the exit polls were coming in. And after that, the results were really dismal in terms of the fact that, of course, we are having a coalition government, NDA-led coalition government, and that is good for the economy, but the expectations were of a clean sweep to an extent. So there was a lot of disappointment initially around that. But as the day progressed and the results started flowing in, there was still a sense of confidence, and I would say it's not the kind of confidence you were looking for, but it is something's better than nothing sort of a situation where the markets had to start and make peace with the new normal, with the new reality that this is what has set in, and start looking at the bright side of life, that at least there will be some form of policy continuity. Although you'd see post the results, the trajectory have not been very robust. Markets have been largely indecisive. The flows have been erratic, and that is because while there is political continuity, there are questions on the roadmap to policy continuity. With the coalition government in place, there are questions around how far will NDA-led, the NDA be able to push the envelope in terms of its agenda that it had set out on achieving earlier, even before, in the previous terms. So these are a few concerns that continue to loom. We have, of course, found our feet because the India growth story remains intact. I believe the right way to sum it is, it has been deferred but not derailed. So we can see a lag before we, of course, we found our feet, but we need a stronger footing. So it could be some time before we find some very strong footing. I'm expecting it to be around a month or two before we start getting clear signs of how's the world economy looking at us. And, of course, the domestic investors remain upbeat on the Indian growth story.
How does one really navigate the next 1 month? I mean, should one really be extremely worried about the kind of volatility that we've seen? Of course, you described it well, calling the sentiment really indecisive at the current juncture. So, where do you see the markets from here in 1 month, and how should one navigate the short-term volatility?
So you asked something right at the start. Should we be worried about the volatility in the next 1 month? I'd say worried is an understatement. It is only fair if you are more than worried. However, please understand volatility is your friend if you are a longer term investor. And, it could be, a pretty stressful month for those trading in the short term. We expect volatility to remain in the elevated levels. We do not expect any dramatic change to occur within the month itself, as, most actions by most buying action by domestic investors could be met by a little bit of profit booking by the foreign investors. However, like I said, nothing can be said. It is all a developing story. If there is any turnaround, we have a few trigger events lined up, like the RBI MPC. Of course, I have my own reasons to believe that there's not going to be too much of big news surrounding it. But apart from that, the developments that will follow, once the oath is taken and the first 100-day agenda is starts gaining momentum, is when we will get a clear sense of direction. But the month going ahead, will be very crucial for the markets to find a firm footing around where what are they going to accept as a starting point, and what are they going to accept as the launch pad from here on. I don't think we are talking about any direction within the month as yet, but we are talking about a strong base within the month.
Right, my next question was going to be about the RBI policy today. Of course, whether or not we can expect anything that would be out of script, because let's be frank. I mean, the election verdict did did take the market by surprise, took everyone by surprise, because everyone was expecting a clean sweep. So today, RBI policy expected to be a non-event. But is there case to revise any kind of inflation growth forecast? Because growth-wise, we saw a good blow, 8.2% kind of a figure for FY24, and inflation-wise, do you think it's too early to make any kind of adjustments, given the fact that we are expected to have a coalition government, in fact, coalition era coming back now? So, any adjustments expected? No.
So, right at the outset, on a lighter note, I don't think we are ready for yet another surprise. So there are also reasons to believe that RBI will, maintain status quo on the policy rates as well as the stance. So, see, a couple of things, that one could take into account. One, that the RBI has been very keen on, emphasizing the fact that they are looking to have inflation CPI within their target ranges on a sustainable and durable basis. So the bigger worry is, acting upon, an inflation, softer inflation print, which could be nothing more than a flash in the pan sort of a situation, right? So RBI does not want to, prematurely react, and, that is that should be taken rather positively. The current, RBI has a very good, and, the policy committee has a very good track record in being very prudent with its rate decisions so far. Right. And, there are a few other things also, like, there continues to remain risks on the food inflation side. So we expect the risks to the upside to remain there. Of course, at the same time, the GDP print has come in really, encouraging at this point in time. So that further takes away any incentive for RBI to, indicate a reversal this early. Right, we do have some more runway before we start talking about rate cuts, especially in context of using it as a tool to fuel economic growth, because the GDP print is already looking encouraging. In fact, S&P also upgraded a credit rating, and establishing a positive outlook on the economic growth journey that we are on. So the levers are, very much in sync with and constant with a status quo, both across stance and policy rates. We do not expect any significant change, in the forecast for either the GDP or the CPI print. We expect it to remain in line. There could be certain announcements around liquidity management actions. The RBI could use its tool of choice, but over the past couple of weeks, the systemic liquidity has been quite erratic, fluctuating really wildly between a systemic deficit and a surplus situation. That also, the impact of that was also seen on the overnight money market rates, where there were significant fluctuation between, I guess, 6.25% and 6.75% sort of a range. Right, so we believe such an erratic flow of liquidity in the system will be addressed by the RBI through some form of controlled liquidity actions. Apart from that, largely status quo, at least in terms of stance. We do not expect any significant surprise today.
Right.
From the monetary policy.
Right. Got it, Nirav. But, FMCG stocks have come back to life, and how, on a day when the market crashed, we saw the FMCG, index emerging as the, sole survivor. But, of course, some encouraging news flow there. Firstly, with the return of the coalition government, there could be more populist measures. Secondly, above normal monsoon forecast. But all this is yet to play out. Given the kind of prices that they are available at, would you still say or advise nibbling into FMCG names at the current juncture? Or would you say that, let some bit of recovery kick in terms of earnings and then take a look? The pricing as well as news flow, how should I put it? The trade-off, do you think it's looking good now?
So a couple of things worked in favor of FMCGs, right? Of course, a lot of us are pinning it on to, hopes of rural recovery in terms of demand, but that is a long outstanding story. We have been waiting for it since ages now. Of course, there are expectations that it will come in over the next couple of quarters, but there's no reason for such an expectation to culminate within 2 days of trading activity alone, right? So there are a few more things that got added to the narrative. One, of course, like you rightly said, with the coalition government coming in, there are expectations of slightly more populist measures, more money being in the hands of rural consumers, and FMCG seeing the early effects of rural demand recovery by way of such populist measures, leaving more money in hands of investors. So that's one. Apart from that, you got to see that FMCG has been as a pack has been suppressed since quite some time. In fact, the valuations have been looking relatively steady and fairly, it was on the lower side, but also fairly justified. But one must also understand that with this entire turn of events post election, there is a fair bit of sector rotation also that has happened in favor of FMCG. You'll see a lot of money being pulled out of more cyclical and sensitive packs like the public sector packs and the defense packs coming out. But this money cannot go in anywhere else, right? It needs to be invested in Indian equities. This is money meant for Indian equities, right? So there is some bit of sectoral rotation moving in favor of FMCGs. And also, FMCG has been known to be a great defensive play, especially during times of indecisiveness. There is one thing, that the public will continue to chase, and, that is consumption. So the Indian consumption story is a very macro and meta theme that will continue, irrespective of the government, largely to an extent, right? So there is some bit of sector rotation also that happened there, and that led to this steep uptick in a rather compressed period of time. So this is one other angle that I would add to this entire narrative that led to an uptick in FMCGs. Right now, I believe there are still pockets of opportunities within the FMCG pack itself. There are a few companies that are inherently looking healthy. In fact, they were looking good and healthy even before this uptick. And now that the uptick has come in, it may seem slightly costly, versus what you're used to seeing it for in the past couple of quarters. But hey, that's the price you pay for waiting far too long, right? As long as there's still more upside, and most of the story hasn't yet played out. This is still anticipatory, and once the story plays out, we could see an upgrade that is that warrants an uptick much more than what has already come in. So yeah, and I feel there are still pockets in the FMCG pack that one can look at.
All right. Very quickly, we are running out of time, but very quickly, would you still see an opportunity in PSU stocks? After there was a sizable sell-off, but some of them have really managed to stage a good recovery. Should one still get into PSUs, or rotate out of it and look at other sectors, perhaps private banks or even IT for that matter?
See, there are still various pockets of opportunities in the PSU pack. In fact, now is a good time to look for opportunities that were earlier costly. I feel the sell-off has come in as a blessing to those who have been trying to participate in good quality PSUs but were worried about valuation. So this comes in as a godsend, where you have another opportunity to participate in the high quality good PSU pockets at much better prices. So there's no reason to stay away from it. Just be far more selective, and there are some gems that could really surprise on the upside in the near to medium term.
All right, Nirav, with that, appreciate your taking our time and joining in this morning and sharing your thoughts with us. Always a pleasure, and I look forward to connecting with you sometime soon again.
Sure.
Well, with that, let's go back to Raja then. Raja, coming back to you, let's take a look at some of the queries that we are getting this morning. Before that, let's take a look at Wipro. That's the top Nifty gainer today. Any levels you'll be watching out for there, and how's the entire IT pack looking to you now?
Yeah, Wipro definitely has given a strong upward gap up, and yes, the levels which I'm looking for in Wipro purely from an intraday perspective will be in the region of around 490 to 495. So that will be the max upside target. Any dip towards ideal buy opportunity is around 465 to 470. Well, that's a little bit far away at the moment, but then that will be the ideal buy opportunity now in Wipro. But if you want to go for a trade right now, it will be an aggressive bet towards the region of around 490 to 495.
All right, 490 to 495 levels to watch out for on Wipro. But a couple of queries on the oil and gas space. Kishore wants to know your thoughts on GAIL. How is it looking at current prices? And Preet wants to know whether he should hold on to GAIL. ONGC. In fact, he's a day trader and wants to know whether he should hold it for the entire day or only for 2 to 3 hours. I mean, it's very short term. But what are your overall thoughts on ONGC and GAIL?
Between ONGC and GAIL, I will definitely prefer ONGC. First, let's come to GAIL. GAIL has been in a sideways phase. Yes, there was some brief upside on the exit poll day, but then the stock continues to be in a consolidation mode, and I believe that there is no support from the momentum space yet. But ONGC, on the other hand, has got a better coverage. Yes, the fall has been sharper. But then people have been tracking ONGC, so it's like a stock which is actively tracked will definitely be bought into at lower level. So that is my premise. So now when you're talking about ONGC, there are a lot of positive news flows that came ahead of the election day, and now once again we are seeing some buying at lower levels. So I believe that ONGC has hit a good support, and within the next 3 months, you will see a level of 300 appearing in ONGC. So I would look to be a buyer in ONGC rather than GAIL.
Okay, that's the view. Prefer ONGC over GAIL. But last query for the day really coming in from Rupak Mehta wants to know your thoughts on a Bata, whether one should enter at these levels and with a 1 year view. What would you advise?
Yeah, like we were discussing earlier, FMCG definitely has been underperformer, and now it's coming out as a defensive bet amidst the cloud of uncertainty. And Bata definitely is a name which was overlooked for a while, but one can definitely consider now because the kind of movement it has shown was that it could reach levels of around 1600 to 1650. One could consider as a short-term play over the next 2 months, or one can also use it as a trading bet, but then stay on the long side in Bata.
All right, stay on the long side in Bata. But with that, Raja, I want to just bring your attention to the market. We've seen such a strong U-turn. The Nifty is up 100 points at 22,930. Sensex is up 300 points, and the mid-cap index is also up by about 0.7%. Once again, a dramatic turnaround within a matter of minutes, right? We were looking at, red across the screen just a few moments ago. Here, given the fact that we have edged back above that 22,900 mark, what is the level that we can expect by the end of the day? Or do you think it's too volatile to predict?
Yeah, see, it is going to be a volatile scenario. But then what I continue to believe is 23,100 could be an upside which one can expect by the end of the day. And it's difficult to go beyond that because there are set of resistances that are coming in play there. And on the downside, I continue to believe at around 22,800 where the over data is also hinting. It may not dip below 22,800. So 22,800 to 23,100 could be a range for the day.
All right, the index may not dip below that 22,800 mark for today. But with that, Raja, we are completely timed out on this edition of Opening Bell. We would like to thank you for taking out time and joining in and sharing your thoughts with us this morning. Look forward to chatting with you again sometime soon.
Thank you. Bye.
Well, with that, completely timed out. But just to remind you, 10 a.m. is when the governor, will address, will declare the monetary policy decision. So we will be covering that live at 10 a.m. on Money Control. Don't forget to tune in for that. And of course, we'll be getting you a post-policy analysis on all the announcements made by the governor at 10:30 a.m. onwards. So don't forget to stay tuned for that as well. Leaving the markets on a positive note, 22,900 on the charts, and thanks a lot for watching. Stay tuned to Money Control for all your other news and updates.